Good morning and welcome to GrainTV for December 1st, 2011. On my right is Logan Burgess and I'm Brock Shimbino. Well, Logan, as we head towards the holiday season, Old St. Nick will be making his list and checking it twice. Commodities have been on the nice list all week long, and in the overnight we saw corn up 3 1/4, soybeans up 9, wheat up 4 1/2 to 5 3/4. But this week has been a little bit of a different story as compared to naughty November. What happened in November?
Yeah, Rocco, we saw grains in general really sell off quite substantially during the month of November. We saw corn down 8%, Chicago wheat down 5%, beans down nearly 6%, and Kansas City wheat down over 8%. You know, really we've seen a strong dollar index as a result of the continuing European debt crisis, and really macro concerns persist. You know, we've had kind of a weak export market. Yesterday we saw the Chinese come out, lower their reserve requirement at banks, trying to kickstart that economy. A lot of people are really hoping and expecting China to remain a buyer in our export market. I know that today we saw some export sales come out. What are we seeing in those figures?
Yeah, basically we saw corn exports come out well below expectations at 280,000. We saw soybeans come in at the middle of expectations at 480,000 metric tons, and we saw wheat at the upper end of expectations at 503,000 metric tons. Corn, looking at a little bit bearish this week. Soybeans neutral, and wheat, we saw a little bit of a bullish sentiment in the export front.
Absolutely. Well, we'll have to see how these export sales figures play out in Chicago when we come back to go on the board.
I used to have several sites. Now I kind of like the grower's edge. It gives me that cash max. You can tell it which markets you're looking for, and it will tell you what your highest net back is based on the price they're paying at that time and the basis that they're paying. And that's pretty handy because I don't have to go to so many different sites.
Welcome back to GrainTV for today. Let's go on the board with Logan Burgess.
Yeah, Brock, over here on the FireTech platform, we can see that corn is trading relatively unchanged. Beans are up 4. Wheat is up 4 to 5. Kansas City's up 4 3/4. You know, we're really being helped out by a little bit more being taken out of that dollar index here this morning, it looks like. You know, there's an old adage, if the Bears have Thanksgiving, the Bulls are going to have Christmas. Brock, put yourself in St. Nick's shoes here. I want to see your naughty or nice list as we move toward Christmas. First one up, corn, naughty or nice?
I have corn pegged as nice going forward for about the next month or so. My reasons for that is we've had pretty solid ethanol demand. We've had decent export sales overall, and we still have a continued strong basis level in the cash market. What are your thoughts, Logan?
Yeah, you know, I'm going to take a little bit of a different standpoint here. I think with regards to corn, I think corn can expect a pretty bland pair of socks in their stocking on Christmas morning. I think we're going to remain relatively range-bound here moving forward. I think we're really going to need some big news to come out to really jar this market. We're trading around $6 level, you know, like it's not a big deal anymore. I think we're going to remain around that level moving toward Christmas. Changing gears here, looking at soybeans. I'm putting soybeans on my naughty list. Macro concerns persist. We really saw out of China that demand is going to be an issue here moving forward. We have a great start to a South American crop. The South American crop, you know, during their storage season, they were more competitive on the U.S. front. They were taking sales from U.S. soybean producers. That shouldn't be happening during harvest here. Ultimately, this is going to lead to lagging exports moving forward, I believe. I'm putting soybeans on my naughty list. What are your thoughts?
I also have soybeans on my naughty list. The technical landscape right now is very weak for soybeans. We've seen a large sell-off recently, and adding to that sell-off has been the commodity funds jumping on board, and we've seen them actually move into a net short position in the last week or so. So I have soybeans on my naughty list. Turning our attention to wheat, though, the last commodity that we need to speak about today, I have them also on the naughty list. We have a large global supply, which leads to export competition around the globe. Adding to that export competition is a strong dollar, which makes us less competitive on the world front. And lastly, we have had a good start to the winter wheat crop. We see a good to excellent rating for our winter wheat crop here. That is 5% above where we were last year.
Yeah, it really looks like the U.S. crop was really helped out by a pretty good amount of rain that we received in areas of Kansas and Texas a few months ago here during planting. So that, you know, the U.S. crop's off to a great start, and really we've been talking about for a while there remains a glut of wheat on the global market. You know, I agree with you. I'm saying wheat's on my naughty list here moving forward. I think prices need to go a little bit lower given the amount of supply that's out there.
So checking that list again, I have corn nice, Logan's neutral on corn. I have soybeans naughty, Logan's naughty on soybeans, and wheat is naughty for both of us as well. Make sure you follow us on Twitter, check us out on Facebook, Get a hold of us at 877-GRAIN07, or as always, take a free demo at grainhedge.com. We'll catch you next time.
Have a good one.